What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you some upcoming events, some earnings, some Fed, whatever the case may be, to get you prepared for the week ahead. If that sounds like something you are interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. Now, there is some interesting data this past week. Obviously, we had non-farms. We had Powell, which in itself was very interesting. There's a lot of stuff that's essentially uncovering up to this point, and a lot of things that are still building to the thesis that I have. I have a general thesis that I think is going to play out in the next couple months. I have a short-term thesis as well, as we could potentially climb a bit going into essentially Q4 earnings, which is starting to report around January 15th. We'll get the banks and the big tech. So with that being said, we still got to get through January. Biggest events, obviously, you can see on here this week. There really isn't a lot of event. There's still a lot of data out there. Don't get me wrong, but I just want to point to the fact that pivotal matters is going to be the CPI, which comes out on 13th, in monetary policy to close out the year. But looking back on this past week, we did have Powell. Now, Powell came on, and he kind of gave a little bit of that hopium in the fact that things could potentially start easing here in this next monetary policy, and that's rate decrease, or not decreases, but essentially only applying a 50-point basis move in this next monetary policy. But he still stipulates that things, you have to be mindful. He's trying to keep it open because inflation, again, can run away. Again, I feel like I'm beating a dead horse here, and I'm sure you're tired of probably hearing it, but this is the case. Nonetheless, we are seeing, he provided that hopium. So that little bit of hopium, essentially talking about that things could potentially start easing as far as a 75-point basis move is potentially on the board coming into this monetary policy. The market really kind of took that and ran. And then biggest other thing that we had is, we had non-farms. The market completely got wiped away from this. I believe it came in at 260K and estimated it was 200,000. So again, something that's really mindful, because we just had unemployment numbers and they were up 100K, I believe. And so there is a lot of misguided information. What is it? Why is there so much more people unemployed, yet non-farms are showing, we're absolutely crushing it? So there's a miscommunication, misinformation going on there. That's not just there. Even in the growth, essentially the savings rate in which people are trying to get ahead. Something I've added here as well as a national savings rate. Typically on average, if the market's doing all right, it's roughly around 7, 6, 8, roughly around there. And then our current average is 2.4. In March of 2021, just of last year, was 26. Now the pandemic high was 33.8. It shows you how far we've come down and how quickly we've come down to what is going on. Now, again, one thing to point out, what Powell was talking about as well, is he started bringing up rent and talked about essentially a delay in the rates. And this is something I try to emphasize every time you see these numbers and how they're miscalculated, because rate increases or there's going to be a delay effect in how that affects the market in general. And so it was interesting that he did bring up rental units, because obviously he's aware that it's going up. Right now, just there is a little bit of ease in the rental units, but you have to also understand we're getting a lot of housing data that is misleading as well, and showing that there's not as many houses essentially being purchased. A lot of the pool of people that could afford essentially what they could a year ago is dwindling down fast. You're very limited, and especially with the resources. How is someone supposed to purchase a home when their savings rates is at a very, very low? 2.4 is extremely low. I don't know if that's pretty close to. I don't know if it's a historic low, but it's getting around the Great Depression uh, signs that we're currently sitting in. It shows you how bad things are, and to try to believe that we're not in a recession, however you want to define that. We know England is obviously in a recession. If this this goes back, we're essentially teetering on a depression right now. Depends on how you want to gauge when and where we started this current not recession until where we are now. So, with all that being said, trying to condense what I've previously said and try to add some new flavor to my talk here is essentially that in my mind, core CPI, monetary policy, I think are going to play out. I think we're going to 50-point basis move. I think the core will either remain or come down a little bit because last thing you want to see is core start climbing back up. And then everything I'm talking about will get accelerated, and you'll bring back fear back into the market. Right now, there's a lot of hopium in the market because we could potentially be hitting peak inflation, but we really have to see. Now, one thing I do like is Kathy Woods, lover or hater, she does come out with a weekly analysis, and she talked about a lot of some stuff that I talk about all the time. Not to sound like an echo chamber, but she does kind of evaluate a lot of different things that I talk about specifically, and then she kind of goes into more detail a lot about this stuff. And she brings a new perspective. I think it's always good to have multiple perspectives, even if it's just mine, somebody else's, whatever the case is, and then come to your own conclusion. Something I always talk about. I don't push my agenda on anybody. I don't push my thesis on anybody. I always say that you should generate your own thesis because ultimately your gut intuition is going to tell you what the correct answer is. And for me, it has always worked out that way. And why I only listen to certain people. There is a lot of noise, and so you have to find some people that you think are very different in a sense. They are not essentially repeating everybody else under the moon. That things are just fantastically great. You have to understand that too. You're in an environment which the Fed and administration are going to point attention to specific things to draw attention away from other things. This is what they do. And to think that they're going to put out reports that are, 100% accurate is absolutely absurd. We all know it's manipulated. We see that multiple times. More news is coming out. I mean, hey, look at Elon and the whole Twitter situation. So with all that said, I'm not really expecting a lot for the next couple of weeks until we start getting into, well, essentially until next week when we get into monetary policy and we get into core CPI. And that will pretty much be your event. I think you'll get a couple days. You might sell off into that, and then you might turn around and make some sort of move going into earnings mode. And again, a lot of forecasts as of right now are not good at all. These companies' CEOs have been telling you things look really bad. We do have FedEx reporting, I believe it's on the 20th as well. So just before Christmas, they're going to give you some numbers too. And last time we saw, they essentially fell off the planet. And again, that's the heartbeat of the consumer. And it's something I've been talking about, how we need to shift focus from inflation to the consumer. Where's the consumer at? What are they doing? We know saving rates are extremely low. They say, that the average cost of living, right, is even in rental units, even if it's come down, it's still very expensive. So it's not like you just go say, oh, well, I could just get a 30-year fixed rate loan and I can go out and buy a home and I'd be okay, because now you can't qualify what you could for before. You have to understand that just having a single kid or two kids, that's an extra room, an extra couple $100 you have to pay for. So it is not cheap at all. And to think that it's just going to come down, if you live anywhere near a city, which majority of people are having to move to cities because a lot of people are getting laid off, there's no other work, so they're forced to have to move into cities. So just be mindful of that. Where you live really does depend on what you're currently seeing. But you have to find those ones that are trend setting, like Las Vegas, per se, just to talk about housing and how that's particularly working out there. So you do have to shift focus. And this is what's hard about this market when I talk about intuition, is that if you're in the market long enough, you start to realize what you need to actually be paying attention to. And it's obviously not the headline news. It's not what the administration's telling you. Yes, they can move markets. Yes, Powell can move markets. Yes, you should follow the dollar. You should follow the bonds. But you have to ultimately understand that any news event that is out there can override anything that you are seeing. So you have to be mindful of that. So with that being said, SPX 66, Tesla 11, BA 7, Bank, JPM 3. Again, we are, as you saw, SPX was up at 77. So we're dialing back to a very essentially quiet time of the market. I don't expect a lot of big moves, maybe at the back half of the week, just kind of preparing going into next week. Again, you still got all of the China stuff going on with lockdowns over there. So you have to be very careful of that. That could trigger something. Obviously, the Russia, China stuff in general, Taiwan, all that stuff is still on the board. UK. And something else I forgot to mention is going back to the housing sector as well. You have to understand that Redfin, they just shut down their flipping units. They had a division essentially that did a lot of flipping, which they shut down probably, I'm going to say, about maybe 3 weeks ago. And then yesterday, you also had Blackstone, 69 billion real estate fund hits redemption limit. So you have to understand that to be able to liquidate your home is becoming harder. So be mindful of that. And the thing, and this is feeding more into the thesis that I've been talking about, that people are going to try to liquidate their home. Again, savings is low, credit cards are running. Yes, we did have a pretty high savings rate at one point, but where did all that go is the question. And so you're finding a lot of people that are buying luxurious cars and everything else are turning around and selling them. Though that data is out there as well. So all these big extravagant things that people were spending on coming out of the pandemic, they're turning around and selling. And then now saving rates are very low. People are looking to go elsewhere. And a big reason why I believe crypto, even though with the FTX stuff, is held very well, that should speak volumes of where crypto is going to be going in this next bull market. So nonetheless, with that being said, again, playing into the whole potential liquidity crisis that's going to potentially hit the housing industry when people run out of money and they can't do anything because essentially, again, severance packages are running out. And people of it are being told that they can't find the correct talent to come to work. But yet somehow jobs continue to grow. I'm not sure how those numbers are coming out. But yet we have unemployment that just jumped another 100,000. So you tell me, and I'll say read between the lines somewhere and you'll find the correct information. But ultimately, earnings will tell us what we should be looking at and where to go from there. So with that being said, go ahead and pull this up. We can get into some technicals here. SPX, again, I thought we could have potentially had a breakout, but we didn't. We broke back down and now retesting. So I wouldn't actually doubt if this week or if by, say, a monetary policy, we are back down here by 39.54. I think we can get a little bit of selling back down in here to kind of trap us in this wedge. And then hopefully by earnings or by monetary policy, it'll break us one way or the other. I'm trying to really determine where we're going here. But again, really interesting. I love to point this out on SPX. Just before we got on into the last earnings cycle, again, biggest institutional buying right here, this 3,500, and it just went up from there. And so that's what I've been talking about when I was watching this 3,600 level, that I was holding too good. And typically you'll have that one last essentially stop hunt that goes down for institution to get in, and that's exactly what you saw there. Bank manipulation there. So, so nonetheless, you have any reference, always look back at that, and that'll be a reference on how institutions and banks actually get in and essentially can liquidate you so that they can get this nice little run up, especially towards the end of the year. So again, watching that on SPX, the dollar. Now I've talked about this for a while. 105 it breaks if you want the bulls to really continue, and I can actually potentially see this selling off even more. But what you want to be watching out for is that through the study back on is that we haven't even hit the support. We've ran so overextended on the dollar that we could drop all the way down essentially to the 102, and you're going to get a massive bounce off the dollar. Now, the question is this dollar going to start ripping back up to make a newer high here, or are we actually really going to start to sell? We haven't even retested this line yet. And so you have to be very mindful of that. And it's a monthly that once this hits this, you're going to get a big jump, a big spike. Again, when that happens, I'm sure will be the timing of when all the potential housing stuff could happen. So it would be very interesting to watch on how that plays out. So again, you can follow the dollar, but which is great technical wise, and sometimes it plays out, but sometimes it does not. Again, events can override that. The housing market crash by Monday, and then this will just start shooting back up again. So you have to be mindful of that. So monthly, we still got a lot of space to fall down before we even make a lower low here. And even if we hit this, it could wick straight up and make a lower low and continue up. So you have to be very mindful of that. And the same to say with bonds. People, you have to understand that the dynamic of the market is changing a lot because of crypto. I think crypto is making such a big impression that just the way we saw markets before is not the same anymore. And seeing again on Friday, there was new news that more of the financial infrastructure in Stripe, big payment system, is now converting a lot of it in its widgets to crypto as well, and accepting Bitcoin and other cryptocurrencies. So you have to be mindful of that and understand where that's going. Again, not financial advice, but it's definitely something to be looking at. So in Bitcoin, again, holding extremely well. Especially with all the FTX drama. Yes, we got that big wick, but it's still kind of really holding around that 15, which is great to see. And again, I think it's just going to provide more steam in the next bull run. So just be mindful of that. The question is when is that going to happen? Maybe if we can get some kind of crisis out of this whole housing thing, I think maybe March would be the lowest point we could potentially hit, and potentially bounce back from there. Again, time will tell. You can't guess on what's going to happen. Anything can happen. This is why I focus on events and see what happens. Again, you're not going to be able to capture every event, but you can at least foresee some events coming. And again, some of those events provide new information that didn't exist, or point to the obvious information that everybody was ignoring, and either correct or jump from that point. So that's what I got there. Tesla. Tesla's a very interesting spot. It's been holding essentially this 50 EMA. So it's been holding roughly around that 130, 183, excuse me. So kind of really watching that coming in. As long as it can continue to hold, I'd like to take another position in this going into earnings mode. Again, we don't really know what's going to happen with monetary policy, even though I do believe it could be a 50-point basis move. Inflation comes down a little bit, could feel a run for earnings. This is why I'm saying short term we could get a nice rally, but ultimately understand I'm still very, very cautious about what's going to happen roughly around that February, March period, and where that consumer is at and how earnings play out. Again, it could be nothing, but you have to be cautious. If you're not cautious, you will get wrecked. And hopium is not where you want to be on that side of the fence. Again, not financial advice, but that's. So I do have Apple here. So Apple is one that I do really want to watch coming up as well. I really like this base here, essentially around the 135. I did capture this move here, so I'm really trying to look for this thing to potentially come back down, or if it does break, I think we're going to revisit one more time before we start getting a run. But I really want to watch Apple either way. If it does break out, I really would like it over the 152, but then you're kind of playing it tight here up to the 157. So really either 157 break or essentially at the 135 here for entry here as well. So kind of really watching that. Again, I don't really expect a lot this week, but if it does start to sell off, I'm kind of watching that lower level. Airbnb, really watching this wedge here. It's building nicely. If we could dip again here at the 94 mark, look to enter here. Again, we've been kind of getting rejected off this 200, so looking to see if we can actually pop and at least get a run up to the 120 here. So kind of watching that this week. If we can dip down to 95 and jump up to the 120, really watching that for Airbnb. BA, of course, this thing has been a monster. A lot of people are investing more in value just because of it's essentially what's held value, and financials have held pretty well throughout this whole year, and looks like they are starting to rally because of that as well. So I get Airbnb or BA here. Got a potential ceiling here, which is pretty close. Essentially the 190, kind of what you're watching here for BA, which again can help at least stabilize the market if something happens with rates or anything like that. That will take down tech, and as long as BA and financials are strong, shouldn't be a problem there. JPM. I always like over scroll this one for some reason. Okay, JPM. Again, very interesting. It's been playing pretty sideways here. We definitely don't want this thing breaking really below here, the 130. If it breaks below that, you have some nice support here, essentially at the 126. You'll get a nice bounce there, but I think if it does hit that, you're looking for this thing to roll over and revisit the 111. So really kind of watching that on JPM. Again, banks are really just kind of holding. I think it's just waiting on monetary policy here. If it's going to try to break out, again, very overextended. This thing correct at least down to 50. You're looking at 340 so about 40-point move here on GS. If this thing does decide to roll over, which it will at some points, it's just trying to time when it will do that. Bank of America, I don't trade banks, so I'm just kind of throwing that information out there. But this thing, it's been pretty weak. Still has its parabolic move, but Bank of America, again, I hate banks, but this is again starting to roll over. If this thing does break 35, looking for it to hit 34, and then get some more support here at 32, then 30. So I think this thing could roll over even more. But that is pretty much what I got for the week. I don't want to make this too long. I had a lot of information in the beginning, a lot of things, again, you should be focusing on moving forward from here. I think is, again, the consumer is going to be critical on how fearful they are to come back. If they are not fearful, then I think we could potentially recover. Again, the administration, the Fed, they're going to tell you to look one way until they can hopefully fix what's going on. Sometimes they can fix it. Again, you're still kicking the can down the road. I realize financial systems are truly screwed up, but again, you have to also understand that it's they can figure out a way for it to work. They can keep kicking the can until something happens. Yes, eventually it will flush. When that will be, who knows? It's been quite a few years since I was told as a kid on things folding, and it still hasn't folded. So eventually it will, and when that day comes, I think you're going to get more than just more issues in the market that you have to be worrying about. So, with that being said, remember to hit the like button before you dip out. And until next time, I'll see you guys later.